America doesn't bail out the losers. America was built by bailing out winners, by rigging a nation of the winners, for the winners, by the winners. You go to church, Nash? You go to church?
Sure.
Only 1 in 100 is going to get on that ark, son. And every other poor soul is going to drown. I'm not going to drown.
What is going on YouTube? It's Brendan from Market Makers. We're back at work, everybody. Hope everybody had a fantastic holiday Thanksgiving weekend with your friends and family. You got nice and fat, but it's time to trade and it's time to look back at the marketplace. Guys, a couple of quick announcements. We're going to be reorganizing these videos so it's easier for you to navigate. In the beginning, I'll always have my monologue followed by the S&P, Bitcoin, NASDAQ, and gold, okay? The back and middle parts of the videos, we're going to be swapping assets in and out based on what I think might be an interesting trade setup or something we haven't covered in a while. Lee will be time stamping these videos. But let's talk about the thumbnail really quickly. Black Rhino event incoming. Now, some of you may know what this is. Many of you may not. Many of you have heard the term Black Swan. That was a book written by Nassim Taleb. It is an unforeseen market event. Think the pandemic as a good example. A Black Rhino is literally the inverse of that. It is an easily foreseen, large and obvious event that people choose to ignore to their own detriment. And in this case, we're talking about the likelihood of a recession. Goldman Sachs still has a recession priced in around 15%. Most of mainstream media, the money managers, the hedge fund managers they bring on, still talk about a soft landing or slower growth. And then they're excited about what? The Fed cutting rates as inflation comes down because they believe that pivot will be bullish for the markets. Now, I want to explain to you why it's not bullish. And I also wanted to explain the LEI, the leading economic indicator index to you. Lee and I have been talking about making this video for a week or two now. And lo and behold, George Gammon beat us to it. And he did a rock star video, excellent production, got over 150,000 views over the weekend when I saw it. Guys, check out George Gammon. You can subscribe to his channel. I want to play you two quick clips and we're going to talk about it here on the channel because I think they're vitally important. The mainstream media narrative of how bullish a pivot is and why rates coming down is not a bullish event for the market. George, take it away.
Let's go right over to a chart of Fed funds, and we see that just prior to the 1990s, they started dropping rates, and oh, look at that. We had a recession. And let's fast forward to just prior to the dot-com bust. They started dropping rates there. The market was right, but oh, we had another hard landing. GFC, yeah, I'd call that a hard landing. So when you actually look through the data, it becomes crystal clear. The bond market or these interest rates don't predict what the Fed is going to do in isolation. They more so predict what the economy is going to do. And right now, these curves are screaming at us that the U.S. economy is going to slow down significantly. In fact, it's not just going to slow down, it's going to go in reverse.
George is absolutely correct. Rates are going to come down when the Fed cuts, obviously, but they're also coming down because rates are set by the market based on long-term growth expectations and inflation expectations. And when you have an underlying weak economy, rates will come down. Remember, in .com, after rates peaked, 7 weeks later, the market followed rates down. In the GFC, after rates peaked, the market followed rates down 13 weeks later. So if 5.25, 5.2, whatever it was, is our rate peak, then we are on a clock because as the economy weakens, you'll see that reflected in rates. And as George highlighted, when the Fed cuts, you go into a recession. View the economy as the Titanic. It is a large and massive moving ship. You see the iceberg there in the water. But because it takes so long, even after you steer to get out of the way, you still hit the iceberg. Now, the Wall Street elite, mainstream media, the top 5% of the country, they're all content on the top deck listening to the violins play. Whereas meanwhile, you have a huge gash in the side of the ship, water pouring in, and the common person is drowning as your dollar has lost 23.5% of its purchasing power since 2020. So this is a type of information you guys need to be aware of, because historical precedents, historical norms will play out as they always have. I wanted to explain the leading economic indicator index because it's 100% accurate for predicting when a recession is and how to read this index. And George does an awesome job here of explaining to you what it is, how it works, and how useful it can be. Lee, roll the clip.
Which is the Conference Board U.S. Leading Indicator Index. That's right. That's a mouthful. In fact, I had to look at it on my computer quite a few times. The editors are earning their money on that one. But basically, what this is 10 different categories. All right. What are they? Average work week, jobless claims, consumer goods orders, ISM new orders, orders on capital goods minus defense, building permits, stock prices, a leading credit index, interest rate spreads, and overall average consumer expectations. So this chart goes all the way back to 1980 to today's date on the left. We start mid-range here, go from 0 to 15%, and then from 0 down to negative 15%. And what you can see is every single time this index, as represented by these metrics or these inputs, goes negative, it's not just predicting a recession, but the United States is actually in a recession. Now, let me be very clear. There are a couple of exceptions. So we can see right here, let's call it 1995, right there. It's a little blip and a little blip. But right now we're at negative 7.6%. So to be as clear and concise and specific as I possibly can, we have never been more than negative 5% on this index and not actually been in a recession. And once again, right now, as we speak, we're at negative 7.6%.
We are minus 7.6%. Anytime we've been minus 5% or more, we are already in a recession. Guys, this is very powerful information because as traders, I say this all the time, we care about the next 100 points, next 200 points movement in the S&P or the next few thousand points in Bitcoin, but you need to understand the recessionary cycle. When the Fed is on pause, they have not raised rates since the summer. This is your euphoria, your FOMO period of when you can have market movements. When the Fed actually does pivot, it's extremely bearish. They pivot going into a recession. We know we have the Darter rule of unemployment going up 0.5% within a 9-month period, 0.5% off the trough of 3.4. 100% of the time in all 12 recessionary cycles signaled a business peak with declines to come, or you're already in a recession. So these are the clear indicators of the black rhino that everybody's choosing to ignore to their own detriment. And you may wonder why. Why is it that media ignores it? Why is it that media ignores it? I found this study. I thought this was really hilarious. I found this study. They followed 40,000 people, I think for 20 years. You can read the actual writings on it for 20 years. But they found that people, Lee, show them the chart. They found that people that have a bullish or a optimistic view of finances, right? They have a bullish or optimistic view to have lower cognitive ability, meaning in layman's terms, they're not as smart as people that are realists or pessimists. So maybe this can explain also why when, Bitcoin was on its bull run, the 250K channels, 500K channels garnered hundreds of thousands of new subscribers, whereas the people were telling you, hey, the peak is in, this thing's going to be tanking. I said 10.5, it went to 15.5. who got closer. And now we're looking for that next pull down to 11 to 13K when the S&P rolls down to its recessionary norm of 3,200. But we're going to look at all these numbers, look at the charts, look for our key retracement to see if the markets want to get bullish again after we retrace, or if we're going to start breaking down here in the video. All right, Lee, let's start the show.
Take your pick. Either way, you lost. But I made more money during the crash than before it. You can too. You just got to stop lying to yourself and ask, what did you do wrong that your family lives in a motel?
All right, boys and girls, you can see on the thumbnail, Lee has a red moon. I don't know why he has a blood moon there, but we have our full moon. So price right now on the S&P is 45.56. Again, we were looking for that 45.55 to 85 top we talked about in last Monday's video. We got the 45.69, but specifically here, looking at our lunar cycles, let's take the fibs away. Why is this important? Because going all the way back here, you can see we've had tradable pivots in the marketplace. Many of these tops to the exact candle or within a candle or two of a significant move in the marketplace, including the formation of your first double top with your full moon, new moon. This gave you this move in the marketplace, as well as our 43.82 short I shared with you guys for a 300-point drop. So very key to track this. And now we have our full moon. And if we are playing in the Puet's crash cycle, remember, it's a very specific crash window. You have the prerequisite of a bubble. You have the ring of fire solar eclipse. You have your lunar eclipse, with the lunar eclipse full moon providing you the exact bottom candle for this rally up. And within the next full moon cycle, so we just hit the full moon, he says you should be seeing a topping in the market followed by 2 to 4 weeks of selling. So we need to see if we top. And as you guys know, I'm expecting a retracement. 2 to 4 weeks of selling. That's going to be interesting to see what the markets do as we approach. I think it's December 13th with the next Fed meeting, because December 12th is the next formation of the blue moon, which would form right here. And we could have this exact same three-wave pattern that forms here in the marketplace. If this plays out this way, regardless, you need to watch this. Again, Steve Puet studied 8 significant crashes. He wrote his book in the 90s. I went back and looked at the GFC. That crash cycle is presented there in the GFC as well as 1929, the silver crash, I believe 1972 as well, 1989 Japan. So significant crashes with a lunar cycle playing a major role. Trading at 45.55. Let's see what happens the next couple of days. Our next video will be Thursday, guys. We'll see if we start getting some dissension here in the marketplace, looking for that 2 to 4 weeks of selling if that crash cycle is to play out. Let's look at the S&P on a 3-week chart. I want to show you this. This is important to understand. Always look at your macro patterns and your micro patterns. From your pandemic low to your all-time high, to your market low, to your rally high. It's a 3-wave pattern of a double top. Significant because, as you can see, what you have here forming off of this rally here. So you have your rally low, current rally high, corrective low. You have another 3-wave pattern for a double top. This is the same 3-wave pattern that you had form over here as well, okay? This sold off after making a double top structure, a 3-wave pattern. So you want to see what this does as far as confluence and your targets, which we go over every video. You have this nice W pattern here that formed that I've showed you guys many times now. You can see it on the weekly as well as a 3-week chart. This gives you the 1272 at 45.52, which is essentially what you've been hung up on since you rallied up to this area. And if you take your rally high, you guys saw me do this on the daily, down to your corrective low, that puts you at the 886 at 45.52. So you have some confluence here. And where am I thinking we can go down to? If you look at this from a couple different perspectives, if you pulled this from the rally low, the market low, up to your high, you'd have to retrace significantly just to get to the 382 is down at 4180, which is not coincidental where you found support. You wick below it, move back up above it. But you can easily just pull this from your rally corrective low to your current move up and get some targets as well. 382 is at 43.90. So why are we interested in trading this range? Because at a minimum, I'm looking at a retracement to the 382, which is 43.90. You're trading at 45.50. So you're looking at a nice 150, 160 point drop. And if you come down to this 618, the most commonly retraced to fib, right? You come down to the 618 and find support. That's 42.81, almost yet another 300 bar drop. And then how the market handles this retracement will determine your next steps in the market. If you come up, make a lower high, start breaking down, you just made another double top, and you're going to want to watch that neckline at 41.03, because if you break that neckline, you're going down and descending, and you could be selling off heading into this recession, which may have already started. Okay. But if you come down, let's say you hit the 618, you rally up, make a higher low, and then rally up again, you're making your W pattern. Take out 4609, challenge your all-time high, possibly take that out. Either way, I'm expecting a retracement. We're on a thin rally, 10 stocks carrying us up 93% of the way. I'm expecting this retracement. Where it retraces to will be key to watch. And if it is going to continue to move up without retracing, you need to flip 4607 here on this 3-week chart. Okay. You flip 4607, which I think is 4609 on my other chart. You flip 4609, then you could have a chance to challenge this all-time high as well. I just think the market needs a breather. Pullbacks can be bullish, guys, but I personally think my bias with our fractal pattern that we have presented is going to be a lower high once we retrace, okay? Because we have this beautiful fractal pattern of equidistant moves, 201 bars on a sell-off, 203 bars on a rally. This 202 bar sell-off would take us out to May 2024. Let's look at the S&P really quickly here on the daily chart. Again, just looking at this retracement coming back up to that low, you can see that would be too much of a drop from here, 43.91, just to come down to this level. I think it's not too much of a drop, I should say. So this is why it's a significant retracement level, significant place to trade with a reasonable stop loss above 46.10. I want to see if we can get this drop in the market. And we have our target that we, of course, hit that I show you every video. Or we got within $15 of it, I should say, 45.85. You're at 45.57. I think you're going to start looking to roll over. Let's look what our indicators are showing us. This is the volume I'm talking about, guys. Look at your volume divergence. You don't trade based off volume alone. This is part of Wyckoff studies, Wyckoff volume spread analysis. Low volume rally, the whole rally up. You have divergence here, right? And then you look at your MFI, you hit overbought, it's turning down lower. You have wave divergence, volatility momentum, got overbought, and now it's wanting. So can we still get a little spurt up, hit 45.85? It's possible. It's only $25 away. So you could easily hit it and make your final top there, or you can just start rolling down. I think we're going to know a lot more this week, guys. So we'll see what happens this week. Let's go ahead and move forward. And let's look at the RSP really quickly. This is an equal weight S&P. Remember, 490 of the stocks are basically flat for the year. They're at 0% for the year. Societe Generale released a report saying the same thing. Outside of 10 stocks, the rest of the stocks would be flat on the year. You got up to the 618, almost 147. Death cross on the equal weight RSP. Again, bearish structure here on the RSP. You have to flip all this resistance. It's just another way to track the markets. Look at the indicators for are you bullish or bearish. Let's look at Bitcoin on the 3-day, zoomed out first. Tracking with our esoteric wave theory, absolutely gorgeous. We have our 1618 provided these clear tops, and you went sideways here from March all the way till October till we had our breakout that we traded here on the channel as well. And now we're in this range, guys. So let's go ahead and look at this on a smaller time frame because we're just chopping around. Let's look at the 8-hour and see if we have any structures at all. We had this nice move up, as you can see, but we're just chopping around a very tight range, 35,321, 38,050. You've made some higher lows. You're kind of trading along this trend line here. You see this one? We can maybe even pull this out a little bit further. You got all these touch points on the trend line. See if you can hold it. But you're starting to get divergences as well. Let's look at this back on the daily because I think you had some bearish divergence. Yeah, you do. I mean, look at your bearish divergence on your money flow. So your money flow made your high and then a series of lower highs as price did what? Kept going up. So the way you can battle divergence is to go into accumulation and just keep going sideways, right? You can battle this, let the oscillators reset. You have lower highs here in your waves as well. So you have some divergences. If Bitcoin can keep going sideways, remember our ultimate target here is 41K. I think you can achieve that target. If you get to 41K in confluence with the markets topping, Bitcoin's going to follow the markets back down as it did on the last major sell-off. Remember, Bitcoin went to 15.5. S&P went to 3,500. S&P trades at its norm of 3,200 with the recessionary news, the Black Rhino event. Then I look for Bitcoin to come down to 11 to 13K in that range. And guys, we should have some big rallies along the way, especially when we get down to that level. Ultimate goal, if this is a bubble, which I believe it is, but if it is a bubble, I'm looking for Bitcoin to go sub 10K when that actually pops in full, okay? And we'll know once we test our market norms on the S&P, how strong that rally is and how we form after that. Let's look at the NASDAQ really quick. NASDAQ, again, we have a beautiful W structure as we've had on all of these indices, as you can see. And so this gives you targets to project from. If we look at the NASDAQ, pull down our targets, we had a beautiful target hit since last video. There you go, 16,144. Look at that. S&P was a little bit shy. The NASDAQ almost hit it on the button, as you can see here on the daily time frame. So this is my topping range, guys. We essentially got to the target a few dollars short, got to 16,125. So this is my topping range. You might have some volatility here. I want to see if we're at 16,024 right now on the NASDAQ. See if we start topping out. Look at the daily. You have bearish divergence on the MFI. You can see prices rising. MFI is going down, money flow in the asset. And so we have to look at our retracement levels as well. When you look at your retracement levels pulling from that rally low, that corrective low here up to your current high, the 382 is at 15,336. So just like with the S&P, guys, if you get this retracement, and let's just say it goes to the 382, which is a shallow retracement, 15,336, it's all going to depend on what type of pattern you form on the way up. You made a new rally high, you took out this other fractal, but you're juiced out, right? You need a pullback. I do believe you need a pullback. And when you look at this, even if it comes here, if you get the W pattern, take out this fractal, you can move up to challenge your all-time high. But just like all the other three-wave patterns, if you retrace, whether it's a 3-2 or deeper, let's say you go to the 618, this next move and where you top out at, say the 618 of that rally high or the 786 and come back down, it's the same move that you do in larger movements here in the marketplace. So this is a key tradable move as well, but I like this area up here. If you form a top under that 16,144, that's my predictions for the NASDAQ, guys, looking for these all to top and retrace with your obvious retracement targets of the 382, 50%, and 618. So 15,336, 15,121, 14,849, and see what happens when it gets there. But the reason these are good trades is because this is a great movement in the market. And I think it's at a key position to potentially retrace. Let's move on to brother gold. So gold, this looks like Lee was on my chart. So gold, guys, a couple of things I want to share on gold. We shorted the market up here on our Discord. Guys, if you want to trade with us and trade these markets, consider checking out our Discord because it's free for you. If you want to try out SimpleFX, great sponsor, or BingX, another great sponsor, get our bonuses with our link. You can trade there if you choose to trade, and you can check out our room, get all of our indicators, all of our trades, TA, live streams, all included, and it's all free for your first month. Lee, show them the SimpleFX app. It is fantastic. SimpleFX has been a great partner, guys. With our link, you do get exclusively up to a $5,000 first-time deposit bonus available instantly to trade with. Instantly. So you get to trade with it right away. So check them out, guys. And gold, guys, this is what we're looking at. So we shorted up here at 2055 was my trade in the room. Had a nice 200 bar drop, right? 200 bar drop. Now you have a nice rally up. You formed what looked like to be a three-wave double top. You were beginning to form it, but you took out this fractal. That is bullish. So can you get any more momentum off of this? Well, let's look and see, because if you do get more momentum here, looking at 2030, next key level resistance, and 2057 at the 1618, almost challenging here your high, your all-time high, right? So 2057, if you can continue this upward thrust. Now I'm looking at this specifically on the 3-day because I want to show you a couple of things. Almost approaching overbought, but I think you can get up there to that 2057. But when you get overbought on the 3-day, on the gold chart, it's been fantastic trading levels. Look at this. Got overbought up here. And this is all the way up at 2069, and you drop from that 2069 all the way down, guys. This is a great movement in gold here, all the way down to 1614. Okay. Major drop. So on the 3-day chart, indicators can vary on different chart setups. So always look at your different levels when you're looking at what gets overbought, whether you're using RSI. But on the 3-day chart on gold, I like it a lot. 22% move from the last time it was overbought. And over here, Elon's in the way here. I think that's the high right there. Over here, nice 8% drop, 7.91%. And over here, we were not overbought, but we made divergence. You see this? You have the higher low from this high, and you made divergence, which is why we shorted up here at 2055. So that was an awesome trade as well. But key level to watch here on gold is 2030 if you continue to upward movement, and 2057 being harmonic expansion, getting close to your all-time high. Watch that level, because I think gold will be fully overbought on the 3-day by the time it gets to 2057, if it's able to do so. On the daily, you're not overbought at all, so you have room to move up, okay? But it looks like you have divergence here. You do have divergence because you made your MFI almost got overbought here. You made lower highs in your MFI as price continues to rise up. So you have bearish divergence looking to get overbought in the 3-day. Watch those setups. Looking at the Russell, again, broader U.S. market, guys. This is the broader representation of the economy. You've been trading in a range, and you've been trading in this range since summer of 2022, June of 2022. You've been stuck in this range between 1639 and 2030. And where you are now is exactly what Fibonacci predicted based on that lower CPI print. We hit 1830 at the 1618, this harmonic expansion of our W pattern, right? 1630, and you're just stacking candles side by side. You have a death cross here on the Russell as well. Maybe you can come back up and retest 1830. It's key resistance. You're at 1800 right now, but wait and see what happens here. Lots of people in media are predicting small caps is the place to be. It's a horrible place to be when the recession comes, okay? Horrible place to be. Doesn't mean you can't trade it and have some market movements. Be aware of the Black Rhino. Let's look at the Dow really quickly. Dow, same concept, guys. Let's take that corrective rally low. If you look at this, 382 is at 34,219. You're at 35.3. So you got a 1,000-point drop just to come down to this retracement after this parabolic rise up. Of course, you could always shorten these retracements, and you could look at your last collection here of candles as well and do something like this. But even here, you're at 34,804. So you're still at a 500-600 point drop from where you're at now. Looking for the Dow to top out here as we have the beautiful W pattern that we take targets off of, and we hit our targets on Fibonacci harmonic expansion to the 1618, 35.3, testing the base of the channel that you're up channel you're trading in. You're at 35,308. So obviously you went a tiny bit above it here. You do have bearish divergence as well on your MFI. You have wave divergence as well. So looking for a topping pattern to start to form here right around that neighborhood of 35.3, guys. This could take a little bit of time. We'll see what happens this week. Lots of different news events could drive some psychological moves in the marketplace. Let's check out the DAX real quick, because the DAX has been on a nice run as well. We have our great W pattern that we took targets off of. We got above the 1272. The trade I like on the DAX, guys, you have your death cross. Remember, you can rally in the death crosses, rally above death crosses. I like the DAX at 16,179 to really stretch this rally out. Germany's GDP contracted more than expected. For Q3, it came in at minus 0.4%. So they're going into a recession, or they're in a recession. The UK's GDP came out at 0%. US GDP predicted by the Fed to be 1.2, trading down from 4.5 or 5% last quarter. Okay. So watch this on the DAX. The DAX got overbought in the MFI. Would love to see a last little bit of a surge. You're at 15,978. Love to see us come with a 16,179 and start building a bearish structure. You have some nice wave momentum, overbought in the volatility momentum though. So that's what I like on the DAX. 16,179. You want to try to hold 15,978, which is where you're trading now, to get this nice little pop up. If you start printing a structure here, guys, in other words, if this comes down to say 15,838, comes back up, makes a lower high and starts doing this, that's your trade right there. The double top, right? That's your trade right there on the DAX. Let's look at the FTSE. FTSE micro intermediate bullish trend. Again, 0% growth on your GDP. Death cross. We predicted 75.39 based on Fibonacci. Your 618 would be your top. That's where it hit on this rally. You're stacking candles. Again, bullish uptrend. Can you come back up? You got to flip 75.39, guys. If you do, I think 76.14 is your absolute top. But I expect this thing to top out below 75.39. Maybe pull down more, maybe come back up and give us a nice tradable three-wave pattern, just like that. Okay. So watch the FTSE. Let's look at the indicators really quickly. MFI, it's slightly bullish, not very. It's just kind of flat. So it's kind of, you can kind of see it expressed in the candles as well. CAC French 40, our targets once again off of our W, guys, noticing a trend here with how we're pulling targets, but off of our W, the 1272 at 7301, this could be your top. You may not get to 7451 on the harmonic expansion, 1272 being the square root of 1618. So if you start rolling over here, watch for this move. Again, you might pull down to 7183, look for a lower high to give you a three-wave tradable move if it expresses itself that way. And you can see you have your death cross on the CAC as well. So you're rallying up into the death cross. If you break out a little bit, then watch this zone between 1618 and 1272. Nothing to trade here yet. You're just hitting Fibonacci resistance on the daily time frame. Made a lower high on your MFI. So you have, once again, bearish divergence, good momentum, but bearish divergence. Let's move forward. NVIDIA. So NVIDIA came out with its earnings since our last video, and look what happened. So they had blockbuster earnings, but they sold off. Why? You know, a lot of it was baked in. A lot of it was baked into the price already. And as you can see, NVIDIA sold off, fell right to support at the 476. So the likely move here is, if this gets a little bit more bullish, is to come up and do what? Potentially make a lower high. And that's your trade right here. Okay. I would like to see if this does get more bullish, right? If we get very shallow retracements in the market and the market rallies up hard once again, then you can get your pullback, right? So you get your pullback, break out of this zone, and then watch 527. That's a key area we were targeting based on harmonic expansion here from BCD. Okay. So this is your most likely next move here in the market, and you can fib here on the daily time frame and pull this down and see where your 618's at 494, 786 is basically at $500. So basically you want to watch this around 500, see if this comes back up between 495 and 500, starts making a lower high. Look at your indicators that you like to trade with and see what it does, because right now you're trying to hold support in MFI. You could see this way back up and give you this nice lower high. You're trading at 483 right now, and see if that holds, guys. If it does hold, could be a really nice trade for some nice declination in price. Let's look at Tesla. Tesla is not doing much. It's stacking candles here on the 8-hour. You have a little double top, but that's not doing anything. You have the 618 between 240, 46 at 230. You're going sideways. So until you see some more bullishness or bearishness, break below 230 or break above 240. We had our gap fill we were looking for. Nothing to see here on Tesla. Stacking candles. Ferrari still off to the races. Need a pullback here, guys, to look for a top structure to trade. So looking for something like that to potentially trade. But for now, it just wants to go vertical. It wants to go vertical. Beautiful double W pattern, and it just took off to the races. Blasted past 357, waiting for this thing to top out and trade it down. Adobe, same thing. Beautiful W pattern. Adobe has their earnings coming out next month, the 13th. So you got above the 1618, you're at 623. Not much to see here on the daily yet. Really just want to see a retracement and how it handles the comeback from that retracement. But let's see if we lower this really quickly to the 8-hour, because this is a great AI play. And not many more candles here. Let's look at the 4-hour. Yeah, it's just an upward trajectory, right? So I want to see some more rollover here in the market. 4-hour MFI, it's not overbought yet. So it's a wait and see on Adobe, wait and see on Ferrari. Let's look at the crypto stocks that I added, MSTR. So a couple of things here. I like to trade MSTR. For those of you that don't know, this is MicroStrategy. So they have a lot of Bitcoin, whatever it is, 150,000, Michael Saylor's company. So it moves heavily with the price of Bitcoin. I took my fib retracement here, guys, from 475, pulled it down. We're at the 1272 at 520. That's where you're getting hung up at the moment. Now, if you can flip this, and if Bitcoin specifically can get up to 41K, maybe we can get up to 578. It's a $70 move from 509 where we're at right now. But if you can get up to the 1618, 578, I'm interested in looking at a trade there. If Bitcoin never makes it to 41K, keeps going sideways and starts breaking down some, then you have to look at this 520 range as potentially being your top, okay? If this is potentially your top, you're just chopping sideways, right? I don't really have anything here. You have bearish divergence a little bit here. You have money flow going down. Price is still rising. You have some wave divergence forming, but you're stuck between this 475 and 520. Don't really see anything on the daily that looks extremely interesting here yet. I want to see if you can try to pivot out one way or the other, but this is going to move with Bitcoin. So be very well aware of that. Let's look at Mara. Mara, the thing about these crypto stocks, when you look at this, these have been stuck in ranges a long time, since August of 2022, that local high there, and your base of July 2022. So these came obviously way off their, look at that, way off their highs. So you could argue that it's accumulation, and you could have an argument there based on your low, your higher low, and the length of time you're spending here. But we all know this is going to move with crypto, right? So if Bitcoin can go more parabolic than I think it can, but if it can take out 41 and just keep moving up and all these inflows come into crypto, well, obviously these would benefit from that. But I think more likely scenario in this long accumulation phase here is you have to look at where you could potentially top out at. Now, what I see here, if we measure these declination moves, I think you're going to have a double drive here. Look at this. You have a equidistant moves that we talked about like in the last video on the S&P, right? 48% drawdown and a 48.5% drawdown. So 48 spot 38, 48 spot 56. You get a signal wave, which forms a reversal. Here's a reversal to the upside. So I'm pulling my fib retracement from here to this pivot high here at 1392 to this low. You're stuck at the 618 at 1138. To take this level out, you got to flip 1392, come up more bullishly, flip 1392, maybe back test it for support. And the 1618 would be 1810. And the problem is when you look at this, that's your fractal high over here, which you've been below for, a year and a half. So there's a lot of upside resistance, but your immediate resistance is 1134. You need to flip 1392 to come up to 1810. Maybe some of this is possible, obviously, especially if Bitcoin really starts moving, but that's why I would watch that trajectory. But overall, guys, these are going to track very closely with crypto. 786 also just above you at 1247. And then of course your low, which you put in down here, is $5.20 and below. So be aware of that. If you start seeing a bearish structure, which we have nothing yet, you're just in an uptrend, but if you start seeing a bearish structure print, be aware of that because these can break down much more significantly from where they're at. Look at Riot. We look at Riot, same thing. I just highlighted some of the fractals here so you can see you've been stuck in this range since August of this year, $12.55 to $8.61. Riot, just like Mara, way off its highs, okay? So again, you can argue bullish accumulation, put in your lows and moving up, but we want to look at this. Let's go ahead and do this. You want to look at this from where you could get to realistically, especially if you're trading these assets, right? So right now you're hung up at 1210. You got to flip this fractal high. If you can flip this fractal high, then my target up here at the 1618 is $15. So you flip this 1255, get your Livermore pivot to the upside. You need to surpass 1362, which lines you up with this resistance over here as well, and that fractal high of 1440. So that's your upside potential. Immediate upside potential that I see is this 1499. Okay, if you can flip 1255 with some momentum, but again, it's going to heavily depend on what's going on with crypto as a whole, especially specifically Bitcoin. MFI is just super choppy on the median line. You do have some wave momentum. This could just as easily die out here, guys. We're at this fractal high of 1255. You're at 1191. So watch this and watch this for any structures that print, three-wave patterns that print like double tops, and watch it in confluence with what's happening to Bitcoin. Guys, hope you enjoyed this video. I'll have another video out for you Thursday. Please do like and subscribe to the channel. Consider checking out our Discord, and I'll see you guys Thursday. Take care, everybody.